Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good day, all. Ira Epstein of Linn & Associates with your metals market update for this Monday, the 19th of March, 2018, just after 4:30 p.m. Central Daylight Time. Interesting day. We have the G20, which ends tomorrow. We know all the talk that's going on. Lots of people very upset with the U.S. on tariffs. Now we're wondering what's going to happen with Iran. Then you get to the oil markets. I wrote about this over the weekend. What happens if the U.S. backs out in May from that? You lose 1 million barrels a day back on the market. In other words, it doesn't come forth. That, of course, could be made up pretty easily just by China. Not by China, by Saudi Arabia and Russia. There's a lot there. But the bad thing that happens, and you got to watch, is what happens to the dollar in a trade war. And I wrote over the weekend what happened under President Bush and under Obama when we tried putting on tariffs. And it just doesn't end up well historically for the dollar. Is that bullish for the metals? Well, that's got to be determined. What is not bullish for the metals in copper is trade wars hurt usage of that material. And if the U.S. goes ahead and talks about putting tariffs on as much as 45% of the imports, the different products that we import from China because of intellectual property issues, how do they retaliate back? What goes on? It's a mess, and it's right in front of us, not later coming. So when you look at the gold, we've had a correction on the weekly charts, which carried it nicely. It got very close to the 18-week moving average of closes and is held right here. I can live with that. That's okay. Is it going to get under it, or is the market going to try to get its footing here? That's the big question. When we go to a close-only daily area chart, we go from 1341 to 1318, and we've began a bounce off of that number, and we're off of it by $5.50. As you can see, that's how much we were up today. When we come to the daily chart, if you take a look at this, you've got a pattern of a higher high as measured by the swing line. This is that chart without the swing line. When I put the swing line on, I've got my higher high and I've got a lower low. I certainly don't have a trend going. A trend would be lower highs, plural, lower lows, higher lows, higher highs. But a higher high and a lower low, you're just wandering like that, not doing a lot. Where did the market find support? As soon as we start adding layers, that's where you start learning things. I had mentioned to you before that the 100-day average has been a support area. We came down to it here, rallied back to the 18-day average. This has all the makings of trying to do the same thing. The question is, does it end up trending, or is it just a bounce in the market? When you look at the Bollinger Band, gee, big surprise. The market gets down to 13.1380, 13.30.30, the combination of the Bollinger Band, the 100-day average, the lows 13.13.10, and bounces off of that $10. What I think occurred, and this is what I teach, is if traders were short, I think on the first challenge of the Bollinger Band, they came out of that market today. They covered, and I can't tell you they covered it all, but I think smart money would have covered some the way that smart money comes out when you hit the first rallies or the first breaks there. That's what I teach. I've seen it too many times to not believe in it. Does it mean it's right? No. I'm not going to tell you what's right and wrong. You'll decide from that. My ideas, my goal is to present ideas. In momentum, you're flat. You're not pointing up. You're not pointing down. You've got a market that's just gone dormant on you, laying here trying to figure out what happens. Now, if you get a trade war, it's generally inflationary. And that's because everything costs more money because there's a tariff on everything. Could that be coming into the market? Again, don't know because we're not in one yet, but the market is found support where it should. I would expect on a rally it finds resistance in that 18-day average of closes. When I go to the gold-silver ratio, and now I'm on the June gold versus the May silver, so I've changed this a bit on you. That happened today. You can see how you're pointing up. You're not at an all-time high, but I'm going to repeat myself. The 80 area is a historically high level for that ratio. In silver, you're in a clear downtrend. You've got lower highs, lower lows. You went to the lower Bollinger Band on Friday, tried it again today, and you got a bit of a bounce. You are oversold. In this market, I would not be surprised to see sellers show up at 1649.5 if the market can get away from the oversold part that it's in right now. In the copper market, will you fall to the lower Bollinger Band? That's about the only question I have. You're not trending. The market showed you that on the bounce, the combination of the 18 and the 100-day average of closes, that's the one in green, was too much for the market 4 days ago, and now you've slipped back into that quandary area. You're also oversold. There is a common theme. You're oversold, and other than silver, most are not trending in these markets. Now we come to the platinum market. In the platinum, what are we doing here? It's the first thing I ask. So both numbers are under 20. Day before, they're both under 20, but not the day before. We're just oversold. We're not embedded. Number two, what's going on? You came down, you closed higher, and again, the 100-day average is acting as a point. You slipped under it, you got right back to it and challenged it today. You did the same there. So the longer-term moving average is still throwing out that ray of hope on the chart that maybe it gets overdone in that area, which leads me to think that if the market pops up tomorrow, this number of the slow stochastic will probably go positive over 20, and maybe you can get a run to the 18-day average. There's nothing bullish on the chart. That's the thing I want to make clear. You still got to get over the 100-day and to get up there. Let's assume the market got over 970, 960. Well, then we take another view. But if you take a look at this break low right here, it's 952.40. And if we look at the most recent break low right through here, we don't have one yet, but today's is 947.30. We don't know if that's going to continue. If, as I just said, you rallied up dramatically, you'd still have a lower low and a higher high. Those are the things I start looking at. The market that had the most promise today and just couldn't get over that 18-day average was right here, the Palladium. Why? Because it does have the pattern of higher lows and higher high. Momentum is pointing up. You can see two levels of resistance, the 18 first and the 100 above it. To get the market bearish, you'd have to get through this 976 level. Then, as long as you didn't get over that 1002 area first, you'd have lower highs, lower lows under the 18-day average. The problem would be you already know you're oversold. So if you go down further, you're just going to stay oversold. It's got a better chance of being bullish than bearish. In the dollar index, the dollar sort of stuck right here at the 18-day average of closes. It's trying to get itself set for another trade. Look at how the Bollinger Bands have narrowed in. I still lean that if on a trade war, this market's more bearish than bullish. People don't run to it, they run from it. It stands a lot to lose. So just be cautious on that. Again, that's history, recent history. Doesn't mean it's always going to work. The market is neutral because even though the swing line is up, you're under the 18-day average. Momentum is actually trying to turn down on you. Put it all together and you get an interesting story. Now, one of the things that I like to use to figure out where markets go, and I track that dollar index and gold a lot with it, are the price counts. If you haven't seen our price counts, you want to go to our website and sign up to get them. It's important. Now, we also have what's called a chart of the day, which is really a price count of the day. And what happens is after a market gets a setup, you need a confirmation, and if it confirms, away you go. Example, in my gold report, I had told you that you needed closes over 1309. I was waiting. I need two of them if you understand how price counts work. I got one. That's not confirmation. That is a market that challenged it, and the next close, doesn't have to be right with it, would be the confirmation. Haven't had it. So I'm sitting here in limbo trying to figure out what to do next in these metals, and they're one of my favorite markets. So as I'm looking at them each day, I'm scratching my head trying to figure out what the next move is, and you start wondering. And I'll do another gold report to explain that soon. If you want to get on all our lists, get these reports, go to our website, give us a call. We'll take care of it. I'm Ira Epstein. Talk to you tomorrow.